Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Thursday, the 13th of August, 2026, and we've just had a couple of B-tier U.S. economic reports. In today's video, I'll break those down for you as well as get you ready for everything else you need to know ahead of today's U.S. session. Let's get into it. Coming on the back of yesterday's as expected CPI report, traders were curious to see if the PPI or producer price index would show anything different. In this case, at the margin at least, it suggests that in July, inflation pressures were lighter than expected. As you can see here, PPI was essentially unchanged month over month, bringing the year over year rate down to 4.7%. Looking at the core PPI report, which filters out some of the more volatile elements and is seen as a more indicative measure of underlying inflation, that came in below expectations on the month-over-month reading, bringing the year-over-year rate to 4.2%. However, we are not seeing a major market reaction to this, both because it's PPI and not CPI, it's less significant for the economy, and because all of this data is back in July, which of course, all economic data is lagging to some extent, but in particular, this is when we had relative peace in the Middle East, we had relatively lower energy prices, and those situations have essentially reversed now that we're here in August. So traders are essentially skeptical that these falling price pressures have continued and are likely to continue in the future, and that's why we see a relatively limited market reaction to this PPI report. The other release we had that is notable, I always like to check in on initial unemployment claims. This is one of the most timely indicators we have on the U.S. labor market, and it showed a slight deterioration here, 209,000 new unemployed Americans in the survey week. That kept the 4-week moving average steady, and to me is still indicative of a relative strength in the U.S. labor market. Finally, this won't be today's chart of the day, but I did want to at least mention that the Prime Minister in Japan has apparently signaled support for faster interest rate hikes from the Bank of Japan. That is not leading to strength in the Japanese yen, but it is something that has increased the implied probabilities of an interest rate hike sooner rather than later in Japan, and that's a storyline we'll continue to watch moving forward. Today's chart of the day is the S&P 500. This broad index of U.S. stocks has been very, very quiet, almost unseasonably quiet, even for a slow seasonal period. Looking here at the 4-hour chart, we can see a relatively large rally through the first part of August, though for the last week or more, we've seen the S&P 500 consolidating in about 100 pip range here between 7,700 and 7,800. This price action creates what's called a bullish pennant formation, and we are at record highs. As the name suggests, a bullish pennant is generally a bullish pattern here. What traders will be looking for is a breakout above that symmetrical triangle pattern here at the top to signal perhaps another leg higher in the pattern. That said, all technical patterns are probability based, so if we do see a break lower, that could point to a near-term pullback in the broad U.S. stock market, a key measure of risk sentiment, so it's something to monitor very closely even if you're not trading U.S. indices directly. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I could ask just one quick favor before you go, please do tap that like button before you close this video out. It's a great way to show your support that's absolutely free and really helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com for more videos like this. Thanks again, and best of luck with your trading today.